Sure, we'll make him co-host. Yeah.
Yes, thank you.
Thank you.
Bhagyashree, just make Gaurav by co-host.
You're able to present, right, Gaurav, now?
She is making holes now. Just a second.
Okay.
Yes, I think we are able to.
We'll wait for 2 minutes, and by 4 or 5, we'll start the session.
Done, done.
We can start the sessions anyway.
Thanks, Harish. We, from behalf of the chamber, we'd like to welcome everyone. I keep saying that in our industry, it's very difficult to get bored because the pace of change is so quick that it's just impossible to keep up. So nobody really gets bored. And the topic for today, as everyone knows, is GST. There have been recent amendments that have changed a few things, and we have the most able jury here to educate us on all the changes. From ELP, we have Mr. Rohit Jain, Mr. Harsh, and Mr. Gaurav, who've been working with the chamber for quite some time for various representations, and they've always been forthcoming whenever the chamber has needed their services. So I'll leave the stage to them, and we can take it forward from here. So Rohit, Harsh, Gaurav, over to you.
Thank you.
Thank you, Sunny, and good afternoon. We would again like to thank CREDA MCHI for giving us this opportunity to present very important changes which have been made by the recent GST Council meeting, which has of course resulted into significant adverse impact to start with for the real estate sector. And there are a lot of new questions which have been arose in terms of what would be the impact of these amendments. More importantly, do I really need to change any contractual structure to reduce the impact of this amendment? What we intend to cover today as part of a presentation is there are some legislative amendments which have happened as far as the 47 GST Council meeting, and thereafter various notifications and clarifications have been issued. Clarifications were as recent as yesterday evening, which also we have covered as part of this presentation. And second one is in terms of there are some good positive judicial developments which we had in last few months, and we intend to cover those as well for the purpose of benefit of all the participants. Now moving on to the first and the foremost is there any change in the outward supply tax which is required to be paid by us as a real estate developer? So we had a position since 1st of April 2019. We know the 1st April 2019 is the big event which had happened where the entire real estate GST structure had undergone a change. We had a new levy structure, and the applicable rate of tax under these different notifications effective 1/4/2019 was for a residential project, which is an ongoing project. And we know what do you mean by ongoing projects, which had a specific definition under the notification. And if it is of an affordable in nature, the rate of tax applicable on output was 8% with ITC. Residential ongoing for non-affordable is applicable at 12% with ITC. Residential project under a new scheme where we have not gone for an old or an ongoing scheme as a project available, then it is an affordable, it's 1% no ITC. And if it's non-affordable, it's a 5% with no ITC. And if it's a commercial, depending upon the RREP and REP, depending upon the rate in that particular scheme, it would be either 5% with no ITC or 12% with ITC. So the first and the foremost as a good news is, or maybe the bad news, that there has been no change in respect of this output tax structure which is applicable. So that is continued to be applicable in the same way that what I need to charge as a developer to my customer who is buying either residential apartment or a commercial apartment, the rate of tax continues to be either 12 for ongoing, 1 or 5 for residential, or 5 or 12 for a commercial. There has been no change as far as that rate is concerned. One important aspect which is being put to us by multiple clients, and many of you have raised this issue, that whether this 8% benefit is available to us or not, given the nature of the entry which exists under the GST law. So let's go through the relevant entry for this 8% scheme. This 8% is effectively a 6% of SGST, 6% of CGST, put together the 12% rate of tax, 33% is towards land abatement. Therefore, the effective rate of tax comes to 8%. That 8% was covered by an entry called 1E, small 1E, wherein construction of an apartment in an ongoing project under any of the schemes specified in subatom B, C, D, E, D, A, D, B, or subatom B, C, or 5, or C, or 3, 6. Any of these in respect of which the promoter has exercised the option to pay tax on a construction of apartment at the rate specified for this atom, then it was liable to be 8% GST. And we also had the term affordable residential apartment, which is defined into different categories of affordable residential apartment, where subcategory A was in the respect of below 60 square meter and cap of 45 lakhs. And subcategory B was in the context of all those existing old schemes. If you are working under that, even in that case, there was a 8% rate which was possible, even though the value of the flat is above 45 lakhs. Now, therefore, a lot of you have had a question in your mind that whether because of these entries B, C, D, DA of 4 got omitted, whether for the purpose of affordable residential apartment or whether for the entry IE, or that is 1E, whether this benefit of 8% would be available or not. In this context, the first and the foremost that we all should know that as far as the entry is concerned, which is 1E and the term affordable residential apartment, there has been no change in the amendment which has now been effective. So the language of the entry continues to remain same even today in the statute book. So there has been no change in the entry per se. Therefore, the question really comes up is that by omission of these entries B, C, D, D, A, do we have an impact to state that now this entry 1E is no more available, or can we take a position that irrespective of the omission of these sub-entries, the benefit should be available or not? In this context, we need to refer one of the most important judicial principle called reference by incorporation, which has been consistently held by the Supreme Court. Let me read it, one judgment only in UP Awas Evam Vikas Parishad, wherein if it is a legislation by incorporation, the rule of construction is that repeal of the earlier statute, which is incorporated, does not affect the operation of the subsequent statute in which it has incorporated. Or so also any amendment in the statute which has been so incorporated that is made after the date of incorporation of such statute does not affect the subsequent statute in which it is incorporated. That means at the time of introduction of this entry, which is what we have seen IE, in that point in time, all of these sub-entries existed in the statute book. Then whether the subsequently these entries got omitted really does not have an impact on this very entry of IE, and we need to look at it as if this existed in a statute book, because there is no change in the entry IE itself. And in view of this judgment of a Supreme Court, the rule of construction that has been consistently adopted when it comes to a legal interpretation of this sort of an issue, it is very clear that this entry IE not being amended, therefore the benefit of 8% GST will be available to all those schemes which have been claiming the benefit prior to the amendment. So therefore there has been no change. Therefore we don't need to have any apprehension. As far as the output tax is concerned, we will continue to be liable to pay only 8% GST, which we were hitherto been paying prior to the amendment. So that is one important point that we wanted to bring to your notice, that we don't need to really worry about the output tax being increased to 12%. No, it continues to be 8% for all those ongoing projects where we were claiming the benefit of 8%. Moving on to the next amendment, which is all those work orders which are issued by the government, which is either central government, state government, union territory, or local authority. Many of you keep on carrying a lot of work for government, including a civil structure or any other original works meant predominantly for use other than for commerce, industry, or any other business profession. So this sort of a work order that we get was entitled to only 12% rate of GST. Now that has gone up, and now it is liable to 18% rate of GST. This entry 6 is omitted in the statute book. Now, what is the impact of this very entry? There are twofold impacts that we have here. First, if you are doing any work order for government entity, clearly this has now changed. We will end up paying 18% GST on output. But the biggest impact for real estate developers is that we do a lot of infrastructure development projects. We do a lot of public amenity projects, such as parking, such as some convention center, such as some auditorium, such as some hospital, which are all public amenities that we do it for corporation. And in lieu of such public amenities that we do, we get in FSI or a TDR, which I can use it in other relevant projects that I am developing. So we do, as part of real estate development, significant amount of this sort of activity, where we keep on developing various this public amenities, public facilities for government, for central government, and there we hitherto were liable to only 12% GST. Now going forward, we will end up paying 18% GST, and we all know that 18% GST is nothing but a part of my cost, because I am not entitled to any sort of reimbursement from the government. And if that be the case, this is definitely increase my cost of 6% when I do this sort of a project, in lieu of which I get an FSI. And therefore we'll have to now keep it in mind that when we do this sort of a maths and a working, is it better to do a TDR, buy from the market? Is it better to do this 12% or 18% GST now when I do this sort of a project and get the FSI? What is more feasible? What is more economical? Is now we need to go back to the drawing board again and start re-looking at in terms of our working. So the another important change is that all those work that we do for government, which was entitled to a lower rate of GST of 12%, has now been gone, and now we will be entitled on, we will be liable in fact to 18% of GST. Moving to the next biggest impact for the real estate sector is for the concessional rate of GST on a works contract services. We as a developer regularly appoint various contractors to carry on the work of works contract, where the contractor typically buys the cement, steel, all of this material, deploy the labor, and in turn we award them a composite works contract. All those composite works contracts were liable to 18% GST as a normal scenario. However, there were two entries which were existed, which we call it entry number 35DA or entry number 35A. Under both these entries, the rate of works contract was 12%. Now let's start imagining, or in fact practically we are experiencing that when I pay to a contractor instead of 18% as 12%, that is straight a 6% the saving that I get, because I was not entitled as a developer any ITC to be availed of the GST charged by the contractor. Now, if I am not entitled to any GST credit, which is an ITC of charge by the contractor, this was making a lot of sense and a saving, that instead of paying 18% GST, I was paying to my contractor only 12% GST. Now, in that context, we had these two interesting entries, which is 5, which is a composite supply works contract for low cost houses, which is a sub entry number DA, up to corporate area of 60 square meter per house in an affordable housing project, which has afforded an infrastructure status. That means if any project which has more than 50% of our houses which are less than 60, more than 50% or less than 60 square meter, then I was entitled to this benefit of 12% of the works contract, which is a big benefit. And interestingly, for entry 5 sub entry DA, there was no cap of 45 lakhs, which was applicable when it comes to the rate of tax applicable to the contractor. That means we were taking a benefit of 12% if all entire project that I have and my more than 50% of the apartments are less than 60 square meter, I was happily enjoying the benefit of 12% of GST, irrespective of the value of my unit, which is above 45 lakhs. Second entry was for all the new project, which was started post 1st April 2019. We had the 12% scheme for all the affordable. Now, therefore, clearly, with effect from the 18th of July 2022, this 5DA and 5A, both these entries have been omitted by the notification number 3 of 2022, and therefore the entire benefit of 12% has gone, and we will now required to pay 18% GST post 18th July 2022. Now let me therefore just summarize the position. 3.5 DA infrastructure status, pre-amendment 12, post-amendment 18. 5A 12, it is 18. All other schemes, PMAY, all other developmental scheme of highways, roadways, everything, construction project, government orders, work orders, everything was prior to this liable to 12, also has gone up to 18. And residual was always liable to 18, continues to be an 18. And this really has a big impact on our cost going up by 6% for all those projects where I was enjoying a 12% scheme to be charged by my works contractor. A huge impact, 6% straight cost is gone up for us as a developer as far as all of these projects that we are doing. And let me tell you, unfortunately, all of these projects, when I'm doing in an affordable category, when I'm doing it at below 60 square meter, it always had a very difficult numbers, the monetary gain. Anyway, I was walking in a tightrope in terms of my cost. And therefore, the 6% was making a lot of sense to at least optimize the GST on the sourcing. Now, this has now been omitted, has resulted in anyway a difficult project, more difficult. And we really don't understand the complete rationale of why this should have been omitted. While one appreciates that there was an inverted duty structure and so on and so forth, one could have given the alternate route of refund and various other scenarios at the situations which could have been provided. But unfortunately, omission of this entry and straight making it liable to 18% made difficult project more difficult. And therefore, we'll have to be really now go back to again the number crunching and look at it. What is the real impact of this 6% of the new increase in the rate of tax? The immediate question which has been put to us by many of you is, what is the impact of this entry for ongoing projects, ongoing contracts? And therefore, do I need to apply 18% rate for all only new contracts? Or do I need to apply even for an ongoing contracts this rate of tax? In this context, the most relevant provision is section 13.2 and section 31.5 of the GST law. Section 13.2 gives the concept of a time of supply where it is defined to mean the date of issuance of invoice being the time of supply. Whereas section 31.5 is a very relevant section. It was in the context of a continuous supply of services, where the date of section 31 deals with the raising of invoices. And we have a specific provision in the context of continuous supply of services, where the invoice is required to be raised in terms of where the due date of payment is ascertainable from the contract. The invoice shall be issued on or before the due date of payment. That means the milestone payment agreed in the contract which I have awarded to my contractor, and that milestone date of a payment is the time of supply. As far as the continuous supply of service, we all know all those contracts are more than 3 months, and therefore it is a continuous supply of service. There is no doubt on that issue. And therefore, in terms of section 13 read with section 31, the time of supply is the date of raising of invoice as per the contract awarded by the developer to the contractor. Now, therefore, keeping in mind these provisions, let's examine the impact of this amendment. First, all fresh contracts, we will have to pay 18% GST. There is no question as far as that rate of tax is concerned. The real issue is coming up is for ongoing contracts. For ongoing contracts, we have multiple scenarios which we need to really deal with. First is work completed and invoices are raised. We don't need to really bother. It was liable to 12% GST. However, work completed and invoices is yet to be raised. Now we need to look at it, the contractual term, and see whether that milestone is achieved. As per the contract, then it is 12%. If milestone is not achieved as per the contract, and the date of raising of invoice as an event is still not there, then we will have to end up paying 18% of GST for all those contracts where the invoice milestone date has not yet reached, and we will end up paying 18% GST. Then the two important concept also which is prevalent in the industry is mobilization advance and a retention amount. In that context also, we'll have to see the contractual arrangement and how's the nature of adjustment provided. Say, for example, if mobilization advance is being treated like a milestone payment and there has been no further adjustment provided for that advance on the running bill, then there will be absolutely no difficulty. All of those were liable to 12%. Whereas it was been treated as an advance and the contractor has only raised the advance receipt voucher and not raised an invoice for that advance, and he is making the adjustment on all the running bills which has been raised by him on the developer, then we will have to pay the additional 6% only to even on the mobilization advance which is getting adjusted on the future running bills. So we will have to look at the contractual terms. Similar case for retention amount as well. We will have to see whether it is a contractual arrangement. Is the invoicing is already done or not done for retention amount? And then we will have to examine the applicability thereof. So impact of amendment is a very severe impact. First of all, for all fresh contracts, 18%. For all ongoing contracts also, for all fresh invoicing, it will be 18%. For the past work done, one needs to examine based on the contractual terms, can I take a benefit of 12%, and how do I really look at the contractual terms are. So very important aspect as far as the ongoing projects are concerned. Next big amendment is in terms of reverse charge mechanism or renting of residential apartments. This is again created a chaos in the interpretation and the impact thereof. We have old entry whereby services by way of a renting of a residential dwelling for use as residence was exempt from tax. So let me read it again. Services by way of a renting of a residential dwelling for use as residence was exempt from tax. There was no GST applicable. Whereas we have got new entry where services by way of a renting of residential dwelling for use as residence, except where the residential dwelling is rented to a registered person. That means if that residential dwelling is effectively taken on rent by a person who is registered, then there will be a GST applicable, and that too under reverse charge mechanism is required to be paid by the developers. So the another very impact on all the redevelopment projects, whereby if as a developer I am taking the apartments on rent from other landlords and giving to my existing tenants or existing members of a society on rent, then there will be GST applicable under reverse charge mechanism by us as a developer who is required to pay that, and there will be no corresponding credit available. However, if it is taken on rent by the tenants or members, therefore it is not to a registered person, and we are only working as a reimbursement model, then it still may not be applicable. There still may not be a GST of 18%, which is required to be paid. So the first and the foremost impact for the developers is to look at it from the context of what is a renting arrangement that we have had. As far as these apartments are concerned, do we have an apartment which is directly taken by us as a developer on rent, and will there be a liable to GST? Now, apart from that, If we are giving residential apartment on rent, which is not that much of a regular cases, but typical cases of an hostel, boarding houses, or a cases of such nature where I am using this as a guest house and so on and so forth, all of those cases are also now being impacted. And one is to examine case to case basis. If it is to a registered person, now there has been a GST implications. Now also important word here, residential dwelling for use as a residence. We have some unique cases where it's a residential dwelling used for office and not for a residence. Then can I be liable to pay GST under reverse charge mechanism? There may not be required to pay any GST on reverse charge mechanism if it is used for the purpose of residence. Therefore, it is important that we need to understand three things. One, what is the nature of the apartment? Is it a residential, commercial? Second, what is the intended use of that residence or use of that apartment? Is it for residential purpose or it is for a commercial purpose? And third is that who is the lessee or who is taking that on rent? Is it a registered person or a non-registered person? Are the very, very important factors is what we need to really look at it when it comes to a residential dwelling and impact thereof as far as these amendments are concerned. So very, very important amendment that the residential dwelling, which is used or for a residence and now rented to a registered premises, will now be applicable to GST under reverse charge mechanism, and GST is required to be paid by all those corporates who are taking this on rent from a residential unit. And as a developer, we all know that we are not entitled to any ITC because most of our projects are now under new scheme, and I opt for either 5% or 1% as the case may be. And therefore, this is clearly an additional cost which has hit us again in terms of this new amendment which has been proposed here. Moving on to the next amendment, we have last 10-15 minutes where we'll take up all your questions. So therefore, please, keep your questions ready and keep your hands, at that point in time. Coming to the important clarification which has now been issued is in the context of liquidated damages. As part of our day-to-day business affairs, we are getting into a lot of transactions where we charge penalty, we charge some cancellation charges, we charge certain liquidated damages, or we have been required to pay some damages to some of the suppliers. All of those transactions keep on happening on a day-to-day business. We have now a recent good clarification where they have clarified that once it is a liquidated damages, it does not necessarily mean that they are liable to GST. We need to look at it, the necessary and sufficient nexus between supply and a consideration. One cannot just presume that there exists there's such flow of money and the supply as a consideration, and therefore one needs to examine on a case-to-case basis. But largely the clarification is very, very positive clarification, whereby it is not required to pay GST if you are paying or receiving damages in relation to the contractual agreement that we have got. Only in a specific cases, it has been clarified that the damages may be liable to GST. We have certain examples which has been quoted as part of the circular itself, where builder refraining from constructing higher floor against a compensation from the neighboring project to protect sunlight. I don't think that is a regular transaction, it happens, but even then, if you are receiving something like a compensation, there will be taxable. Liquidated damages for breach of a contract, not liable. Penalty by the developer for delayed construction of house, not taxable. Forfeiture of earnest money by the seller, which is also not taxable. Termination fee or penalty for early termination of lease of immovable property will be liable to GST. So there are different nature of a transaction which have been clarified, either being liable to tax or not liable to tax, depending upon the nature of the transaction that we have got it here. Moving on to the another most important topic for the discussion is the land deduction. First issue is when I sell a flat prior to the OC, we have a statutory provision in the context of para 2 of the notification, which mandates us only to take 1/3 of an amount as towards the land deduction. So if I'm selling a flat, I say at 20 lakhs rupees or a crore rupees, effective rate of tax, if it's an 18%, it goes down to 12% based on the fact that the 1/3 is towards the land which I am charging. Effectively means I end up paying in a 1 crore rupees of a flat on 67 lakhs, 18% GST. So 33 lakhs in this sort of an example is considered to be a deemed value of a land where I sell the flat. We had very interesting judgment by by the Gujarat High Court in case of a Munjal Manish Bhai Bhatt case versus Union of India. And facts in that matter was there was 2 separate agreements entered, one for purchase of land and one for construction of a bungalow thereon. It was a row houses scheme, it appears, and therefore the construction contract of bungalow has been a separate contract and one for the purpose of purchase of land. The value of land in a combined way in that sort of a arrangement was almost 85 to 90% is towards the value of land, and value of construction of a bungalow was only 10 to 15%. As expected, the developer has paid the tax on 15% of value and 85 has been considered towards the value of land. Whereas the department, the GST authorities have picked up this issue and they have challenged this treatment given by the developer and have ultimately hold at a GST authorities level that you are not entitled to take this entire value of land and deduction. You are necessarily required to take only this deemed deduction of 1/3 as provided under the rate notification, and you are required to pay the tax accordingly. That means my 85 rupees of a value of land in a contract of 100, instead of that 85, I was getting only deduction of 33. That means in the balance 62 rupees, I was required to pay GST more, which in that case had not been paid by the developer. Thereafter, the matter has gone into the High Court. Matter has challenged in the High Court, and High Court has detailed out the entire judgment right from going back to the history, right in terms of the story which is being, how the levy has first time come into effect on the construction apartments, the first Gannon Dunkerley, the second Gannon Dunkerley, the LNT judgments, the K. Raheja judgments. All of this detailed analysis have been done by the High Court, and based on all of these principles which have been laid down consistently by the Supreme Court, High Court has held that this 1/3 deduction towards value of land is ultra vires of the scheme of the GST, and the reason primarily being that when the GST law per se does not tax land, how can through a delegated legislation, which is the rate notification, you can include the value of land and tax that transaction? A very, very good judgment by a Gujarat High Court, where they have said that 1/3 value of land as a deemed deduction is not effectively the correct position, and therefore you cannot tax something, land which is per se under the act itself is not liable to GST. What are the open issues in that context? First, can the developer claim deduction in the actual value of land? Second, applicability of judgment where bifurcation towards land and construction services is not provided in the agreement, and how do we really ascertain the value of land? So the most important point here is that typically in Maharashtra, where all of you, many of you are effectively listening to, where we don't identify separately value of land, we charge a consolidated value towards the land and the flat, which is what I'm selling it to him. In that context, can I claim the deduction as per the reckoner value of the land, I think difficult, because Supreme Court or High Court has categorically said that if the value is ascertainable, then this 1/3 deemed deduction is not acceptable. Whereas if value is not ascertainable, then there is deemed deduction provided, which is 1/3. Therefore, I think in the practice which is adopted by all of us in Maharashtra particularly, we don't identify separately value of land. Therefore, one may not be able to say that I can identify the value of land towards proportionate to the sale of that flat. While you may do it still because of the reckoner price of the land and whatever you have effectively buying and selling proportionate to that particular buyer, but that is not typically the ascertainable in terms of how High Court has looked at it, based on the agreement that has been entered between the parties. Therefore, this is a very good judgment, but may have a limited applicability in the states like Maharashtra or other states, where we don't separately identify value of land in our contract when I sell the flat. So this is one of the issues that we need to really keep it in mind. While it is an excellent judgment that we have got from Gujarat High Court, where it has been held that the deemed deduction in all the cases is definitely ultra vires the scheme of the GST and violative of Article 14 of the Constitution. Another important topic is the sale of a developed plots. We, of course, many of us are also in the business of development of a plot or development of a land and selling those residential plots or a commercial plots. And one of the issues which has come up is that would there be a GST implication on the sale of a plot when I do after development? Now, we have got a clarification yesterday which was issued, wherein it was, first of all, what was the issue before the clarification? We had two set of different rulings. One in the context of Dipesh Kumar and Bhopal Smart City, where sale of a developed plot is not been considered as equivalent to sale of land and GST has been made applicable. Versus we have on other in rulings of Kerala, wherein it has been held that sale of a developed plot after completion of development activities is nothing but a sale of land and no GST is applicable. So we have a divergent ruling which existed as far as sale of a plot is concerned. Now the clarification has come, and very welcome clarification, that whether sale of a land after leveling, laying down of drainage lines, etc. is taxable. And the clarification talks about land may be sold either as it is or after some development, such as leveling, laying down drainage line, water lines, etc. It is clarified that sale of such developed land is also sale of a land and is covered under Schedule 5, Schedule 3, Serial 5 of Schedule 3 of CGST Act and does not attract GST. Now the important words which we have marked it. One is after leveling, laying down, and secondly, it is sale of such developed land. So one thing which has become clear, that once I complete the development and then I sell the land, it continues to be considered to be a sale of land only and no GST is applicable. Now the $1 million question which will still remain, that if I am selling the plot of land prior to the completion of such development, will I be liable to GST? I think it appears to be, given the scheme of GST, given the clarification, given the various advanced ruling, that if you are selling the land prior to the development being complete, you would end up paying GST on the value of development. Now there are of course issues of how do I calculate the value? Is it ascertainable? How should I calculate? Under section 15, I can of course go by cost plus 10%, so on and so forth. But one thing that we should not go with the misunderstanding or conception, that now there has been a clarification which has issued that any sale of a developed plot, even prior to the development being complete, there is no GST applicable. That is not the case. That is not the clarification issued by the CBIC or by the circular. It is only applicable only in the context of after leveling, laying down, and when that it is sale of a developed land. So we'll have to keep this in mind and make this distinction when we apply this sort of a clarification to all other developed projects or land that we are getting into. Last few important amendments, and then we open for a question and answer. Another issue which has been impacted adversely the sector is the anti-profiteering. We have highest number of cases which have been investigated, unfortunately, against the real estate developers. Unfortunately, again, there has been no methodology prescribed for determination of profiteering for such sector. NA has not considered the nuances and peculiarities of the sector. It has been calculated as if I am selling some FMCG or electronic product. Unfortunately, and the last but not the least and very, very recent developments is all the orders which have now been issued by NAA for the developers. One of the remarks which has been now made is to publish in the newspaper the details of such benefit derived by the developer so that all the buyers can approach developer and seek that benefit. Very, very detrimental in the context of developer. If I need to start giving in the newspaper how much of benefit which I have derived on transition to GST, in which direction are we going? It's still a big, big question mark. Unfortunately, we have not been able to convince the NAA that it has its own peculiar nuances that one needs to really keep it in mind when we calculate the anti-profiteering. It has now resulted into large demands and protracted litigations. We have had a constitutional challenge before the Delhi High Court. The matter is part heard and it is now pending for disposal. We have had the hearings, rounds of hearings, in fact, where the assessee of the, or in fact, the assessee's representations have partially done. We need to still complete the argument. Then the other side will apply or rejoinder, and then we'll have to complete our submission. So effectively, still long way to go at the High Court. Meanwhile, what has happened is that now the NAA is dismantled and the Competition Commission is now appointed as a new anti-profiteering authority. So all those matters which are with the NAA will now be transferred to Competition Commission. And again, we will have to be really now working at the data, making all the submission so that we justify rightly so that we have not got any profiteering or any benefit on transition to GST, or whatever we have got, we have effectively passed on to all my customers, those who have booked the flats prior to GST. Last slide on this presentation today is some of the key transactions which still remain unanswered. We, as a developer, are eagerly waiting for some of the very important amendments or clarification on these matters. One, which is for long-term lease of land, continues to be a matter of interpretation. It has been considered to be liable to GST and with no corresponding credits. Taxability of TDR or development rights. We all know that development rights also in the context of immovable property and ideally should not have been charged to the transaction. Lot of writ petitions have been filed, including at ELP. We have filed almost 4 to 5 petitions where all of them are pending at the High Court, different High Court stages, where the development rights per se levy on that transaction has been challenged. We also have valuation qua the construction services provided to a landowner or existing members, why it should be on a market value, where effectively I'm only doing like a works contract, where only I am doing a construction. Can the delegated legislation can define the value beyond what is provided under the Act? The same principle what we have got with the Gujarat High Court ruling may equally applicable for giving the GST implication on the market value of this effectively construction services. And in turn, if at all I am liable to pay GST, can I take the ITC? Because ultimately I take all of this cost to pay my output tax. While of course ITC itself is now no more available to us, but to the extent of commercial development which I am doing, can I effectively take an ITC and or not? A lot of these questions are still unaddressed. I am sure CREDA MCHI is taking up this aggressively with the ministries, with the GST Council. I know Sunny has been working very hard on this matter, and hopefully all of this will give us the results one day and we will have a much better GST structure for the purpose of, for us to really live happily and also provide very cost-effective houses or apartments to all our buyers. With this note, I would stop it here. We once again thank you, all of you, for joining this webinar. Now we will take up some questions. We have some 10 minutes to take the questions. I would request my partners, Harsh and Gaurav, to really take all the questions that you may have. Thank you once again.
Thank you, Rohit ji, for a wonderful presentation on the recent amendment. There are a few questions that are already on chat box. Harshbhai, you want to read on, or should I read the questions for you?
No, we will take it up. We are looking at those, Gaurav, and I will take it, no problem.
The first question is, if residential dwelling is given on rent to trust run hospital registered in GST for medical shop.
Yes. So
You're on mute, Harsh. No,
Harsh, you're on mute. You're on mute, Harsh.
Okay, sorry.
So yes,
Can
I'm
you-
audible, I hope now. So the exemption for renting of residential dwelling was always meant when it was for use as residence, whether before the amendment or after the amendment. So in the present case, as we read the question, it is being said that it is used for the purpose of running a hospital. Now, if that is the case, if the residential dwelling is not used per se as a residence at all, then I'm afraid the exemption, in fact, may not have been available even prior to the amendment. Second point, just to note, is the fact that the query mentions that it is given to a trust which is registered under GST. So, dehors of the first, the point is, moment there is a trust or any entity which is a registered person for the purpose of GST, and RCM may apply. But like we said, the first part is more critical here, which is about if it is not being used as residence only, which is a criteria which remains before or after the amendment, the benefit it may not be available. I think that's the question which is, I think, come once or twice in the queries that have been raised. Maybe I can request Gaurav to take on the next query of the liquidated damages applicability. So I'll just read the question, and Gaurav, maybe you can just answer that. Whether the taxability of liquidated damages, effectively the question is the clarification which is given, whether it will be effective from the date of the circular or it will be from the date of the implementation of GST.
So ideally, it is a clarification in nature. It is not a notification which has come. So there is no effective date. Clarification is that they are clarifying the queries or the concerns which the people, assessees are having with respect to the implication of the liquidated damages. There were a lot of issues which are arising, and people and the authorities were demanding tax. Now with this clarification, they have tried to clarify the position that wow, and when which damages or which charges will be liable to GST, and what other compensations or damages or liquidated damages which are paid will be liable to GST. So to answer your question in a nutshell is the effective date. There is no effective date, but this is a clarification for the position under 5E, which was been there in the entry in the schedule 1 and 5E. Therefore, the implication will be since implementation of GST.
Exactly. I think there are more questions. Sunny and Harish, request is some of the questions are a little beyond the topic. So if you can just share our email IDs with the relevant people, we'll be more than happy to answer. Because I see some questions around, what is to be considered for the purpose of 80-20 procurement from registered persons. There's one relevant question, of course, which is on in case of rent that is paid to tenants in case of redevelopment projects, whether that will attract GST. I think Rohit had nicely covered this. that if that rent is effectively being paid by the developer, which means the developer arranges for a unit, pays the rent, instead in that situation the developer will now have to pay GST under reverse charge with this amendment. However, if it is a scenario where the tenant himself is paying the rent and is taking it by way of a reimbursement, then the RCM may not come because the transaction of renting is then not with the developer who's registered under GST.
Okay. So Harsh, I'll just want to discuss one point with you. Some of the developers have received a show cause notice for premiums that they paid to MCGM, and the department has opined that GST is liable on that. I want to know your view on that, and what do you feel developers should do to counter that? And then I'll probably even have something to say to the members.
Sure.
So Sunny, I think that is of course the industry-wide issue, and our view continues to be that premium paid to the corporation is not liable to GST. This they have done. Our corporation is collecting this amount as a sovereign function, as enshrined in the Constitution of India under 243W of article, and such transactions are not liable to GST, and therefore this premium amount should continue to be not liable. Now, what as industry should really do, one needs to really make strong representation for clarification on this matter, Sunny, because we'll have to go back to GST Council and take a specific clarification on this issue. If it is a positive clarification, issue may get resolved. If it's by any chance a negative clarification, one needs to look at it a judicial route of challenging such clarification in a writ court.
Okay. So I'll just appeal to all the members here. If there's anybody who's received a show cause notice or has received any sort of demands of this nature for payments paid to corporation or any statutory authorities, please get in touch with Harish at the chamber at MCHI. Please share these details with us so that we can help and assist, because any one person that doesn't handle this case properly becomes a precedent. It will be a problem for the entire industry and for all your future forthcoming projects. So it's a request again, please get in touch with us so that we can help you and we can all fight this together. Anything else? Rohit, Harsh, Gaurav from your end?
Only one last one, if we may take. The question is, if it's an individual and both the lessor and the lessee are unregistered under GST, whether there will be any implications on renting of a residential flat? The answer would ideally be no, because the amendment that has come calls for an RCM payment only when it is provided to a registered person. And in the query that is asked, I think both are unregistered. So ideally, there should not be any GST implication in this particular scenario. Largely we've answered most of the questions pertaining to the topic. And I think Harish has also just shared our email IDs.
Super.
But more than happy to take up any more questions.
Super. Thank you so much, Rohit, Harsh, Gaurav. It's always a pleasure to have you all on the panel. And I'm sure we're going to keep bothering you all every time we get bothered. So thanks a lot. And thank you to the entire team of MCHI who put all of this together. And thank you to all the members who've attended this. I hope this has solved a lot of your questions. And we'll share their email addresses with you and the presentation so that you all can get in touch with them. And yeah, that's it. Thank you so much.
Thank you, Sunny.
Thank you so much.
Bye.
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 Thank you, Sunny ji. Thank you.
Thank you. Thank you.